Good morning. This is Jeff Scott, and this is my weekend review for July 19th, 2020. This market continues to be something else. Just when you think it can't go any higher, it rotates. NASDAQ tech leaders sell off a bit, and junk off the bottom takes the lead. The issue is, to me, is this irrational exuberance, and are we near a top? Or do we look at China and see the bull market that they're in and assume that that's coming here? I think you can take either argument. Let's look at the evidence and not just guess what we think the market's going to do. As always, this is for educational purposes only. Any recommendations are in the spirit of education, not investment advice. I'm a doctor, not a broker. I am independent. I pay for all the tools that I use, and trading involves risk, and you alone are solely responsible for any investment decisions that you make. I added to this a little bit. Folks know that I've been a staunch follower of Ian Woodward for decades. He improved upon Cancelim. I like what I've learned from Gil Morales, Mark Minervini, John Person, Segar with his Q tools, and others have been big influences on my style. Now with COVID, sorry about that. With COVID, I don't see myself doing any live meetings anytime soon. We did have some fun with a live meeting on July 4th, so maybe I'll try and repeat one of those before too long. But when I do teach, I really just try to introduce you to some of the things that I've learned and hope that you put together your own way of trading and hence be your own guru. As Ian would say, Jeff, I'm not a guru. I teach you to be your own guru. And I think how much better is it than giving somebody some fish to eat, but rather teaching them how to fish on their own. I own lots of software. I use the things that are on this computer that I'm showing you right now. TradeStation, Thinkorswim, both programs are powered by specific indicators and strategies, John's stuff, Segar stuff. And then I use for analytics, I use Hgsi, EdgeRater, the Q tools, and the Dr. K tools. I just want to highlight on yellow, I am not NASCAR. I am never paid by any vendor when you buy something or to say good things about it that I suggest or use. Any affiliate fee offered to me is passed to the purchaser as a discount. Here's the website for Hgsi. If you're interested in it, you can click on the 30-day free trial. You can click on investment strategies and you'll see hundreds of videos by myself, Ron Brown, and others. So once again, the question becomes, where are we? Well, if you were big tech NASDAQ, it felt like you were beginning a bear market this week. I am heavy in Amazon. As I'll say later, I took heat this week because it was down 7.3%. Now, I don't think I was down 7.3% on the week because I had puts, and it isn't my only position. But when your biggest position by far is having a bad week, it's hard to make a lot of money in the market. On the other hand, some of the junk started to wake up. So I'm going to keep us in stage 3 uncertainty. My brain tells me we're probably going down. My heart says we're going up. So I am conflicted, and we've seen it over and over again. As we've thought we were going to be selling off, the market jumps and goes higher. So what did I do to deal with that? I have more cash than I've had in ages, so I am ready to redeploy. The challenge is, where do I deploy it? Are the software stocks and the big cap tech that have been leading this rally dead? They might be. So I've pulled money out of that category, ready to go back, and I didn't go to zero in that group. I got smaller positions, absolutely. I've sold calls. Most of them expired on Saturday as I started spreading out all my positions. And then I started looking at buying some protection. I did buy puts on IGV, which is a software ETF, early in the week. I bought puts on GSX. It just went crazy in my opinion. I bought protective puts. The first two were offensive, where I make money when the stock drops. Protective puts to reduce my loss on Amazon and some of my others. And I bought some contras. So I'm still net long, but I'm not as net long as I could be if I took off some of that protection. Sector review, well, it looks pretty good unless you were in energy or you were in financials or you were in consumer discretionary. So certain things are all green. Utilities, healthcare, all green. Real estate, pretty much green. But there was clear weakness as this market starts to separate the winners and the losers. If we look at major markets, let's just go into my toss instead of looking at a slide. You go into here, maximize sell. So here's 1 year's worth, make sure that's true, of the E-mini futures. Couple of points. We are nowhere close to the February high. That's where the chevron is here. Nor are we anywhere close to the March 23rd low. Frankly, we're much higher to the February 23rd high, and I'm not going to put them on all of these, but let's see. I'm not going to put Fibonacci's on. I think we're running above the 68% retracement. Now, if you want to be somewhat, I hate to use the word bearish, we have not closed above our June highs. We've touched them a couple of times, and for right now, that seems to be resistance. So I'd like to see us plow through here for the bull premises to maintain. If I look at the NASDAQ futures, beautiful uptrend. 17 above the 50, above the 200. You had golden crosses, everything to like. You had a reversal, bad reversal day on Monday. Set my all-time high in my portfolio, and then we subsequently sold off. We also set an all-time high in the NASDAQ and an annual high on Monday. Look how far this has run from the lows in the market. Now, if you take away the peak on Monday, you could argue we're in the same nice ascending trend channel that we've been in since the market reversed. I do think this is something to look out for. Perhaps it was just profit taking. I know it hurt my portfolio a bit, and we will see what happens this week. If I look at the Dow futures, similar to the S&P, have not taken out their prior highs, much lower in the pattern. They're above their 200-day moving average. Make sure this is the daily. The 17 and the 50 are trending up, but they're also below their 200. So it's above the 200, but the major indexes, major moving averages are below. So this is one that has not kept up with the NASDAQ nor the S&P. But it's in the middle because the laggard, although it seemed to have a nice move this week, is the Russell 2000, which just got back up to its 200-day at this time. Again, nowhere close to their prior highs. And by the way, these are not their all-time highs, although they were the high of the last 12 months. The VIX continues to fall a little bit at a time, but still is significantly above where it was resting prior to the run-up in the VIX as the market sold off in February. I think I would feel better if it was down here. Maybe this is the new norm. Has not broken below the 200. And then if we look at the dollar, talk about indecision, it is near the bottom of its channel here over the past year. Just put a weekly on here. But it's sort of kind of where it's been. If you look at a monthly chart, going back all the way to 18, if you take out, I'm sorry about that, if you take out the big run-up and fall related to the February market craziness. So if I look at these major indexes and have to summarize my thoughts thus far, it looks like it's going higher. I'm not sure that we'll end up there and I'm going to point out some areas of risk. But it's hard not to be somewhat bullish when you see these channels here going up on the major market indexes. Let's go back into the presentation. On the weekly chart, it just accentuates the time frame. You can see big uptrends across the top, not as clean on the Dow, and the Russell much more flat over the period of time of these weekly charts. Rates, now it's interesting, the 10-year actually ticked down a few, and the 30-year ticked up a couple. Now that's actually good, I think, if you want to see a widening of the yield curve. Wasn't very much. So I called them steady. Steady at low levels. If I look at the AD lines in white and their corresponding index, the Russell IWM and the IWB, one can see that on small stocks, the AD line is well below prior highs, as is the price. But look at large stocks. The AD line is set a new high all time, and the price is much closer to its prior highs than small stocks. Tells me that small stocks are lagging here. If I look at the NYSE AD line, we are clearly lagging behind the June and July peaks, but you can see in yellow that the large stocks, the spiders, are going higher, as are the transports, but the rest of them don't seem to have much upward mobility. And if anything, the AD line here is slightly negative. So again, perhaps a widening out of the performance of the market with large caps leading. Now, when I look at this, the stocks above the 200-day moving average right here and the stocks above the 40, you may ask, why did I put markets appear short-term overbought? That's because if I look at the 3-month or 12-week new high, new low ratio, the T21-21 Ian Warden, as I showed you on the on the July 4th video series, that when I start to get up at the top of this channel here, or the top of this curve, and I take out this horizontal line, usually the market is either pulling back hard or at least going sideways because it's overbought. We were at 100% of stocks setting new highs or new lows were all new highs over the last 12 weeks. So when you have very few new lows occurring for 12-week new lows and lots of 12-week new highs, that market's getting a little bit overbought. So I think that this alone tells me that some weakness or sideways movement or perhaps further rotation might be expected this week. The daily McClellan, I'm trying to make an argument that it's trying to go higher while this is going lower on the oscillator, but I'll wait till I see, or the index rather, take an all-time new high before I'll call out that divergence. And the same thing here a little bit on the weekly. Here's some interesting things. The bucket, 75% of the stocks are above the midline of their Bollinger Bands. That is bullish, not an extreme. 16% of the stocks are above their Bollinger Band. 16% are just below and abutting. If the market continues to go up, in 2 days we'll be 30% above the Bollinger Bands. And that's another signal that says to me that this market might be getting ready for a pause. I would not expect a Hindenburg Omen signal to fire until we get back closer to new highs. We have not seen one on either the traditional NYSE or the NASDAQ going back since the early days of February when we had the market reversal start. Market tone, everything is green, which is bullish. And notice, interestingly, that as the VIX is slowly coming down, some of the volatility that was extreme, even though we had green, all clear on the markets, that deep maroon just told you the amount of volatility still in the stock market back then. I told you I took it on the chin. I'll show you my bad weeks as well as my good weeks. My stocks, if you look at individual stocks without protection, position size, or the impact of options, was down 5%. Now, I could have been down 30% or up 30%, depending on how I played, if those were short or long. I was down on the week, not 30%. So if you look at just the basket of stocks I have and compare them with the most recent top 50 in the IBD, in HGSI, with my buy watch, so the things that I thought were close, the IBD 50 and the MarketSmith 250, all of them were down. What do they have in common? They were growth. The S&P was up $1.25%, so much better performer. Interestingly, of the 12 what I call filtered buys that make it through an additional step, they actually outperformed growth this week, although it still was a tepid week. If I go up to the top, Kelly Bulls, 15 wins, 3 losses, 6% plus gain. These are stocks that are having that major cycle reversal. So it works on stocks, not just on indexes. Bottom fishing would be stocks that had something interesting going on, maybe a little momentum, but they were down very low in their channel. Well, bottom fishing stocks were up nearly 5%. The trilogy buys, which I talked about on the July thing, one of John's best scans, were actually up on a very bad week for growth. The trilogy buys were up 4.5%. So there were places to make money, it just wasn't in my stocks. Sorry about that. This is a warehouse report from EdgeRater. This is a group performance analysis from HGSI. I'm using the data from a week ago and then looking at the performance walking forward a week. So it looks pretty flat. There are not a whole lot of stocks creating this data point or this data point. But the interesting thing here is you had higher performance on stocks with low EPS rank than high EPS rank. The worst performers were high relative strength stocks. So think about it, if you have a portfolio made up of good earnings, high relative strength, and you want stocks that are accumulating A and B, then distributing D and E, you got hammered this week because those were all the things that were bad in the stock market. Crazy. I got to tell you, I love this tool. And what's amazing is a week ago, I made a comment. And I said, gosh, wouldn't it be nice if these internals that were only available for 1-day performance were available for day 2 and 2-day and 5-day performance. And lo and behold, 3 days later, Sagar sent me an updated version, said I fixed it. Well, it wasn't fixed. He made it the way I wanted it, which is awesome. Why is this awesome? So the market starts, and you get to see on the 1-day performance. As you could see on Friday, 7 out of 11 were up. Across the week, it was 11 and 0. So you get to see which industry or sector groups are taking off in the market. That's awesome, and I've been using it. You can see here sectors, industry, and stocks advances to decliners. Now on Monday, as the market was setting all-time highs for the NASDAQ early in the morning, you may have noticed there was a hell of a lot of red on the charts as the market went on, and then we had a reversal. So sometimes this underneath the high level, the indexes and the sector performance, you start to see some weakness in the market. To me, that's invaluable. Now I can look at it on a longer time frame, getting a sense of whether this market is improving over the last 5 days or is it weakening. Clearly, it's weaker on Friday close than it was the Friday close before. Top down with Q edge. Now I can then drill down and see which sectors are working. And on Friday you had utilities, healthcare, IT, materials, real estate. But on the bottom you had financials, energy, discretionary. So this gives me a clue. I can look at it either in ranking from top to bottom with the highest number, the highest, or I could look at it in percent performance as an alternative. Now I'm interested in healthcare, so if I put my cursor on healthcare or hit the heart on healthcare, then I hit the gears, it's going to pull me down here and it's going to show me the relative performance of some of the various drivers of healthcare. Now biotech, as you'll see on my top-down review of HGSI tools, biotech had a good week and is strong, but supplies, equipment, distributors, and tools and services really come to the top. Now, I highlighted those four. Another change that Sager made is you couldn't do that before. And then I hit the peers, and I open up, ignore the thing in black here, I open up a list of all the peers that are in those groups. Tools and services, distributors, supplies, and equipment. Then if you hit the 3 stars here, the top fundamental stocks will come to the top. So I've done top-down review of sector and then industry groups, and now I'm looking for the best stocks in the groups, and they came out right here. Now, I decided to look at healthcare supplies because whenever I see 100 here, I get exciting. Now, Owens Minor has some very negative earnings per share growth, as does IVC. So to me, it came down to CRI, Life Science Tools, or Lanthus. I decided to look at supplies. So I took Lanthus and I hit this peer here, and that brought up the Vital tool. And when the Vital tool then gave me a large list of stocks that are in the healthcare supplies group, 69 of them. And I learned some things about Lanthus, the price, the market cap. It makes money. Next earnings are not out to July 30th, so I got about a week. Coming down here, one day it was up 0.5%, 2 days down a little bit, over 5 and 10 days up considerably. Okay, that's nice. If I look at one day up, down, 60 out of the 69 stocks of its peers were up. Over a 10-day period, again, a large number were up. The valuation on Lanthus, the higher the number, the better valuation. So it's not overvalued by any means, has good earnings, and has some short squeeze capabilities. So I then hit the peer again, and it brought up the list of stocks that were here with their fundamentals, and when I hit the stars, it came to Lanthus again. Now, why would I expect it to be different? Because this is 69 stocks in its group. It's a much larger number in Vital than it was in Edge, and I just wanted to make sure there was nothing in its group that looked better. Its chart doesn't look great because it's more of a fundamental story, but it doesn't look horrible either, so Lanthus goes on a watch list for the week. Now, I talked about big cap tech getting hurt. Did the Canaries top after a Climax run? Here's Monday and a one-day reversal. Red candle high occurring at the high jump. Got some cool things to show you on that in a second. And then a question that becomes a statement. What does this reversal mean for the broader market? And I think that's something we'll wait and see this week. Coming soon to HGSI, my version of Ian's high jump. So you could see where my arrowhead is the traditional version. You can see my version. Now, essentially, the line looks identical. The difference is that we're running it from here is an absolute number, here is a percentage, and it's going back a number of days. Why is the percentage important? Because a 90% on one stock is the same meaning as 90% on another stock, where the absolute number has no meaning. It also means that I could put in a warehouse filter or view a specific high jump. Now, as George pointed out to me when he sent me this last night to get me excited, and no, I don't have it yet either, but one can hope. This is not a trading system by itself. Yes, it calls out highs and lows. That's why we use it. Yes, it's something to give you a sense of overbought, oversold before you buy something. But where I find it most useful is looking for inflection points and combining overbought, oversold with a momentum or series of momentum indicators. Know your news and earnings. We got our weekly jobless claims. Whenever you have that, you know you've got an important week of news, but pretty medium is what I think. We got some new Fed heads or Fed members being nominated, voted upon. I was surprised. I thought Amazon was this week, and shame on me because I own so much. I think typically it is this week, usually 23rd or 24th. It's next week. But boy, what a busy week. Halliburton, IBM on Tuesday. Intuitive Surgical, this group has been running up, so we'll have to see how it did this week. Coca-Cola, used to be a time when we all cared about that stock. Tesla, Microsoft, Chipotle, Biogen, Align, the most expensive braces stock known to man. Thursday, Twitter, AT&T, American Airlines, some more airline stocks will report. Intel, Skyworks, big names. And then on Friday, Verizon, American Express. So we are in the heart of earnings seasons, folks. We saw what happened with Netflix. That was another thing that dinged me a little bit. I got lucky. I had some calls that were deep in the money. I took off, as I said I would last week, half of my long positions, and I actually bought some puts. Still had some long calls that were going to expire worthless that started the day worth a lot of money. And I just put a an offer to sell them at $20 before the market opened, and they would have finished pretty much worth less than $5 had I not done that. Somehow I sold them. I still lost money, but when the market was bouncing in the first few minutes, somebody took them away from me. Thank you to that person. Market thoughts. The week saw the NASDAQ fall as it took a breather as the money flowed out of mega cap tech and into value-oriented cyclical stocks. The S&P 500 advanced 1.3, but it trailed the Dow and the Russell. So that was sort of a reversion of what we've been seeing. Market was slowed down by a negative week in the mega cap techs, as I mentioned, pestering U.S.-China tensions, falling consumer sentiment, and a rollback in the reopening process in California and probably Texas and Florida coming due to the rising coronavirus caseload. In addition, the inability of the S&P 500 to stay above its June 8th closing level kept the bulls in check. The political craziness now is unbelievable. Clearly, much of this is driven by an upcoming election. You've got far left and far right folks out there screaming. You still have rioting in the streets. See what happened in Portland. You have Republican governors opening up everything and taking heat from the left. You have Democrat governors closing things and taking heat from the right. You have lawlessness in Chicago and other major cities, with the White House talking about sending in troops. Sounds like the perfect ingredients for a roaring bull market, yet the market continues for the most part to go higher. If you look at the sector rotation, rising utilities, real estate, and healthcare is defensive. You can see performance year to date. I'm killing it compared to that number, although I was killing it even more a week ago. My portfolio took some heat as Amazon was off over 7% on the week. That said, my puts kept any losses in check, but they cost me money. I've lightened up again, closed short ends of bullish trades. What does that mean? When I do a Scott synthetic, I'm buying a call, which is bullish, and I'm selling a put, which is also bullish. Selling a put, even with buying a put coverage, is a bullish position. If I think the market's going down, that one can hurt me. So I've taken that off in a couple of cases. As I said, I bought some shorts, raised cash. And although I think the market continues to go higher ultimately, I would not be surprised to see a pullback here or perhaps sideways markets with more rotation. All right, let's go take a look at charts. I know we're half an hour in and you're thinking he hasn't done anything yet. Well, to me, that's where the money is what I just went through. If we look at another high jump change I want to show you. So if we look at the NASDAQ, blue, so it's in the middle, but it's got green daily, weekly, monthlies. The weekly bongo's still green. The high jump bar is high, but it's only 87% of its prior high. It was, if you looked at it back when the market fell over, it was at 100. Now I want to take this day here and I want to show you the new high jump bar, which is this thing down here, and thank you, Frank, for creating it for me. This line up here is 95%. This line here is minus 95. As I showed you with the Hgsi tool, the curves are relatively the same, but the calculation goes from a minus to plus, so the absolute number may be different. So we're showing a 72%, but when I look at the highs here, high in the market, going into Monday, it was at minus 90, excuse me, it was at 100% in blue on both of them. Prior high, 94.5, the day before 100%. So you're going to get the same extension, but you're going to see some variation in the numbers compared to the usual. After another week of testing, the old one will be retired. So this looks bullish. Again, little indecision right here, high here, so a pause wouldn't surprise me, but it's in the center of the channel as well, so it's not that extended as an index. If I look at the E-mini, these red dots suggest some MACD divergence is coming in. It's at a 87%, 64 with a new knowledge base, so it still has a room to go, and it is in the center of its range. If I look at the Dow futures, green and uptrend, center of the level here, and then the Russell, which had a good week, also very low on the high jump bar. Not a concern. So I see a market that, although it's extended, a market is made up by a bunch of stocks, and those stocks that go into the market are perhaps getting extended. The indices do not look overly extended. Let's go into HGSI. Let's go into market analysis user groups. Major markets plus, let's hit warehouse view. Got 27 things here. Let's go to T1 value view, which here. All right, so the leading group here is transports, gold, silver, utilities, and then biotech. Is that a high growth environment? Absolutely not. The laggards, the VIX, the NASDAQ 100, the S&P 100. It's not a big stock market either, is it? All right. Let's pull up the S&P 500. I am using 4K. Instead of complaining that you can't see it, and this isn't meant for anybody intentional, especially my neighbor, I think the best way to watch these is to download the Dropbox video. Click your YouTube in the lower right-hand corner in the gear. Make sure you're in 4K or the highest definition that your computer has. And if you're still living in a VGA monitor, it's time to get a new monitor. Probably time to get a new computer. And thanks to those that purchased the ones I talked about, those three are gone. I've got a couple more that will come off of service soon that I'll put up out there. S&P 500. What's not to like here? It's above its 76% retracement. I see only one thing I don't like, and that could be fixed for me very easy on the first day of the market this week, on Monday. I'd sure like to see the market take out and close above that high. Other than that, it looks fine. If I go and I look at the Dow Jones Industrial Average, less fine. It too is nowhere close to its prior highs. It did finally get above the 200. Let's see if it can consolidate here and go higher. The NASDAQ, the best performer, and clearly the trend is starting to moderate, which is actually a good thing. A little pause to refresh would be fine. And again, that very worrisome reversal day on Monday. Be nice to retake that high. And then lastly, the Russell, which has been the laggard, but this week was a strong mover, also finally broke above its 200-day moving average. How can you be overly bullish? Overly bearish here? I'm not. When I see that T2121, it just tells me that a pause is likely. Now, overbought markets and oversold markets can become more overbought and oversold. No one says they can't. Now, if I go and I look at the IBD 50 ETF, it's a managed ETF, so in and out based upon the IBD 50. Like the NASDAQ had a big reversal on Monday. Like the NASDAQ pulled back. Like the NASDAQ probably just at the lower end of its trend line, of its trend. Would not shock me to see this move higher. And the momentum stocks, which had led the IBD 50 stocks for a while, also big sharp reversal, same story applies. All right, the dollar. Kind of bouncing off its bottom here. It's interesting. Same low hit in December. We did knife below it in March, June, July. Do we bounce here or do we continue sideways? That's a pretty sideways looking chart. The VIX. Has it broken down below the 200-day moving average? It has, with a new person sell signal. Wow, that's the first time we've been below the 200 since this market debacle started in February. That could be meaningful. If you're bullish, that's got to make you happy. Gold with a weak dollar has been on fire, and you could see it. Yeah, let me make it bigger. Sort of sideways movement the last week. Had a person sell signal come in Thursday, actually moved up a little bit on Friday. Silver. Similar pattern. Now these guys slowed down a bit or went sideways. What about the miners? The miners, which had lagged before, actually had a new buy signal. To me, they look like they're going to go higher. All right, so the indexes are supportive if you want to be long. I'm just a little nervous that we may have a couple days of sideways movement. Nothing wrong with that. What about industry groups? This was interesting. 175 groups. If I look at two-day force up, I have 73, led by biotech, e-commerce, healthcare services, precious metals. That's all good. What I don't like is if I go to two-day down, short-term momentum, exploration, airlines, banks, casinos, commercial vehicles, entertainment content, consumer finance, apparel, footwear, diversified banks, oil, gas services. There's some growth stocks in that list of negative. And number two, this tells me the risk-off trade is back because concern about coronavirus, why else would airlines, casinos, entertainment content be on this list? Let's go back, since I'm bullish on the market with asterisks, take a look at some of these groups. Biotech, right click, change the index group. How do I say this? Think about pharma. Think about this country's shift to the left. Think about where the assault on drug pricing has come from. Think about how much pressure these companies are going to be on to sell their vaccines at cost or with a small margin. Think about all the money that the Fed is putting into these companies to help accelerate them. Think about that. And tell me what kind of pricing power will whoever wins, and thank God somebody will win someday and put us out of this COVID misery. But how much pricing power are they going to have? Now let's look at market cap. Moderna's market cap is $35 billion. Seattle Genetics has 6 indications, or has one drug with 6 indications, a second drug that just came out for bladder cancer, and a third drug that just got approved for breast cancer, which I think will be a blockbuster. It's got a market cap of $31 billion. There's something very wrong here. I do not know how people who are coming in and buying Moderna today, except for feeling good that they think they're supporting a company that will be creating a vaccine and could be one of the winners. I'm not sure how this price can stay up here. There is no way that a company is going to be able to make enough money on a vaccine to justify, except emotionally, its market cap. That said, if I had to be a buyer or seller here, I'd probably be a buyer as it took out your May resistance. I'd just be having you can't be too tight because this thing bounces around a lot. I just think the price is way ahead of where it's going to be. And just based upon the pricing power and the margin on that vaccine. Don't confuse emotions with reality. Verona Pharma, we look over here, respiratory diseases, don't know anything about it. They had a Bible gap up on Friday. I like Bible gap ups. They had a kahuna a couple days before as well. Mobile breakout from a squeeze. All the things I like, but I don't like buying things that close down here at 10.5 when they traded up to 16. You got a lot of people here now waiting to sell their stock. Novavax, what's its market cap? $8 billion. That one makes a whole lot more sense to me. So here's a case, perhaps, where a $150 stock is cheaper than a $94 stock. You got to look at these market caps. I still think that's crazy, but can't argue with the hype and concern about this, the virus right now. Inovo Pharma, another stock that's got vaccines and other treatments that could be potential in COVID. A little bit earlier in its pattern, $26 stock, market cap is $4 billion. All these market caps are giant compared to where they were pre-COVID. Again, would I be buying this? Maybe. I mean, it's in an uptrend. It's kind of loose. You want to buy it on pullbacks if it looks like it wants to go higher. Dynavax, another nothing stock, cheap stock, who on vaccine and COVID story has seen its market cap. Here it's $1 billion, so certainly less crazy than some of the others. And then you get to the index. So if there's anything here I wanted to go back and show you. All right, that's good. All right, so biotech is strong, but really driven by some of these some of these vaccine stocks. Now, because I work with a lot of these companies, I can't always buy them. I don't work with the vaccine companies, so I've been buying Labu. And Labu, 3X Biotech Bull, has performed very well off the bottom, from 12 up to, 70, with very little individual stock risk. E-commerce discretionary, this has been a big winner. rumbled in. You look at the weekly, you see a stock that's been doing nothing going back 10 months, and then it popped with a Bible gap up. Again, a couple of kahunas, mobile breakout from the squeeze. This is interesting because of its group, e-commerce platform for consumers and dealers to buy, sell, and trade and finance pre-owned recreation vehicles. Gosh, it was about 3 months ago I made the comment I was going to buy a Winnebago. Ended up, I think I'm going to buy a Mountain House instead, but we shall see. This might be worth taking a flyer, but as I said on the prior stock, this one got up to 40. It closed at 25. It's almost got a double to clear overhead resistance. That's not a pretty picture to me. Alibaba has pulled back. China stocks were on fire for a while. Overstock.com. Don't love the fundamentals. Doesn't make a lot of money. I'd rather see it pull back the flag before it goes higher. Probably not willing to chase that. Here is the index. See anything else here? I do have some Chegg. I think it's going to go higher from here, which is why I held it. I sold half of it as it pulled back, the Monday pullback. These are some good looking patterns. Here's Fetch. Net. All these things have big corrections on Monday. Let's go back. Okay, you might notice from the time that it's advanced a little bit because I just went out to breakfast with my lovely wife, whom I get to celebrate 35 years of wedded bliss on Tuesday. It's a pretty crazy story. I met her on a blind date, proposed 2 days later, moved in about a month later, and we're still together. Here's a stock that I've been looking at over the years just because I love its ticker, Gene. Genetic testing companies and those that develop the test have been hot lately because a lot of the new cancer care drugs are tied to markers that you find with genomics. It's funny, it had a huge move. But again, how do you buy this here? I mean, it closed at 5.8. It ran up during the day to 10.3. That's a huge move. It was up 150% at the close. My expectation, let's see what the volume was. 375 million shares on a stock that, including that day, averages 8. What does that tell you? It was a crazy day. I mean, we can always look and see if there's news. I'll tell you what it tells me in a second. Because they got 5 million in debt. I mean, that's not a lot of money. Oh, COVID-19 disease severity test. All right. I'm not interested in chasing this. What it means to me is, well, it's still a cheap stock. Market cap of less than 50 million. It's a micro cap. I think I would pass on this one. And then we get the index. Typically, I don't go much below the index. Let's just take a look at a couple of them because this was a strong group. IQVIA, I was really smart. I bought it coming off the bottom, but I had 120 calls I sold against it, which was at the 50, and I made 15, 20 bucks on it and gave up the next 35. That's the problem with spreads. Quest. So I see something if it looks like it's setting up. I mean, classic. You're breaking here above the 200, here above the 17, mobile breakout from a squeeze. The next day, your weekly bongo went green. This would have been the time to buy. It's hard to buy a stock up here, especially when you see on the high jump bar, it's up near the top. Wouldn't it be nice when we have a digit, a number there that I can put up here maybe that will tell me when I don't want to be buying something? All right. Fourth group down, Precision. I mentioned that gold stocks look interesting. Here's Newmont Mining. All right, this is what I like. It's pull back to the 50. It's squeezing, had a mobile breakout. A new John Person buy signal came in. I like this a lot. And I think Newmont is not unreasonable here. It's actually got great fundamentals as well. It pays a small dividend. I've been in American Barracks, which used to be called ABX, now it's GOLD. Similar pattern. High base. Is it a cup and a handle and a breakout? Who knows? Anything else that was on this list that attracted me? I also bought, and I'm going to go look at it because the pattern's so perfect. And it worked out the way it's supposed to, which doesn't always happen. Gold Fields. Let's work my way down to it. It's not far. Here's the index. Here's a Harmony Gold, a junior gold play, breaking out here. Now, these are not without risk. These are breakouts from high bases, if you even want to call that a base, and it's at the high jump bar. But just showing you the strength in gold stocks. Pan American Silver, what a beautiful channel. Silver has been doing well for several weeks. Here's Gold Fields. I closed out that trade. So let me tell you about the trade, how I got into it. When Gold Fields broke across 8, I did a very simple trade right in here. Why did I buy it here? Kahuna, mobile breakout, just coming out of a squeeze, and a pullback to the 50. One of my scans, it's done for you every day, on that day, pick that up. So I bought an $8 call, sold an $8 put, and bought a $7 put to protect me. That's run up to 11. Because my risk was so small, I actually bought a lot of it. I bought 150 contracts. I closed out, well, that trade ended Friday because it was the expiration. And I rolled forward, and now I sold a $12 call against it, or $12.50 call, which I'm sure I'll get this position called away. But when you have that many contracts, every few bucks adds up to real money. So I like Goldfields, but what I really like about it is the pullback to the 50, squeeze, mobile breakout, Kahuna. This bar in here, the reds and the greens, that just shows you how crazy the market was, with Eureka's in green and Phoenix's in red, as the market tried to decide what it was doing at that time. Electrical power equipment, well, I had a good pick, I think, in this group. So the first thing you notice is the index up top, so we probably won't be fishing too deep in this. Yep, here's the play right here. Edison, Eaton Rhythm. That's not, I didn't work the stock up. I didn't read about it or check into it. Mobile breakout from a squeeze. A new person buy signal. Kahuna and pocket pivot. This is what I look for. That would have been an interesting buy point. GE too far down the pattern. I hope some of you, I know some did, we gave you Generac sitting off here around at the $105 range, if I remember correctly, probably right here. Why? Mobile breakout from a squeeze, a new John Person buy signal, and a Kahuna. And I know several of you took it because I've gotten several thank yous. Off the 50, which is where I like to look at it. This has had a nice run. My position got closed at option expiration this week. Why do I say close? Because I didn't roll everything as I usually do or often do, because I wanted to reduce my exposure some. Don't know anything about nVent. Trades 914,000 of shares. I'd rather be buying things above the 200-day moving average, but I've got my setup here off the 50. This looks interesting. I don't like, as I said, buying below the 200 because often it gets turned down there. Communication equipment. Look at Ericsson, boring old name, Bible gap up. Unlike those other Bible gap ups that closed near the high of the day, coming out of a squeeze, this looks very interesting. I guess because of 5G, there's going to be a lot of investment, and this suggests that maybe they're one of the guys that takes advantage of the Huawei challenges. Cisco, boring old name. What's it doing? Pulling back into the 50 with a mobile breakout from the squeeze, a pocket pivot, and Kahuna. Let's just say it's going sideways here. And let's say that the person market catcher is going less and less negative. So you got a positive or bullish divergence. with a John Person buy and a buy. I think this looks interesting right here. Earnings are not till August 12th. CommScope, again, this is a bottom fish, all right? It's down well below the 200. Mobile breakout and a kahuna and a new John Person buy signal. And it formed a high close doji on the weekly, meaning within 3 bars of that doji, it closed higher than the doji bar high of the day was. So I typically go through the top 10 life sciences. Well, Quidel, which basically did nothing for years, okay? We're just looking at, here's the 70 price point. All right, for years, the stock did nothing. And one of my good buddies, well, I won't say nothing, it just was not what it is today. It started running in 2017. But look at the run it's done this year. Holy shamoli, had a buy signal come in here and off to the races. Its fundamentals still look very strong. Earnings per share growth compared to the multiple. It's under accumulation. Diagnostic testing and other support for the life sciences. Can you buy it here? Yeah, you can, but you got to be careful on where you put your stop. Maybe you trail it just below the 8-day exponential. What a winner. Woof. Abbott Labs, remember they had a rapid test that moved up a little bit, breaking out here. Illumina, they make a lot of the chips that go into the molecular testing, and you can see how strong they look. Good looking group, isn't it? Specialty Pharma. Another vaccine play, went from nowhere to a big move up, sort of the plug move where you get giant volume and a big move. Volume here was only 230 million shares. Sorry. Back here when no one knew who this company was, 300,000. And it's just amazing the volume that came into the stock here. But it pulled back, had a new buy signal come in here, mobile breakout, Bible gap up and off to the races. I don't know how to play these, to be honest, because they're very extended, as I made the argument before. How do you value these stocks? This is a billion-dollar company. It was a $300 million company 3 weeks ago. There's going to be winners, but I think there's going to be a lot of losers in this COVID story as well. ACIU, that was Siri. Bible gap up, close at the bottom of the day, and then lagged on Friday. I think I pass on this one. Beijing, a Chinese pharma oncology play. I think this will be at some point a takeout by Amgen based upon Amgen's continued interest in buying their shares. Now look at this stock. This is a big company. I like this company. They have a drug approved in the U.S. They have a very attractive oncology portfolio, mostly developed in China. They had a partnership with Celgene until Celgene got bought by Bristol Myers. And now they have a very big partnership with investment in the company by Amgen. This is a player with real drugs, and its market cap is $19 billion. If I had to buy a company, would I rather buy Beijing at 2 times 19 or mRNA at 2 times 30? I'd rather buy Beijing. This company's going to be here, at least their products, a lot longer, in my opinion, than Moderna. But then again, that's just my opinion. EBS, a defense contractor, pharma play. Big move up here. A lot of these stocks that I'm not spending much time on are just too far to buy. Here's one that's setting up. It's already had a move. 2 kahunas in a row. That always tips me off. Mobile breakout from a squeeze, recent John Person buy. Yeah, you wanted to buy it here. at 120. Up here at 132, it's probably too expensive. But it just took out a chandelier stop, so I don't have a problem looking at that stock at this point. Zoetis, a veterinary medicine play. So there are stocks to like. And then application software. This had been just a big leader, and you could see Monday reversals hurt this group. Twilio has had some analyst upgrades. Price is 280, 290. Had a nice day on Friday and a soft NASDAQ market. You could see the weekly jackhammer signal, a very pronounced hammer. That's usually a reversal signal. DocuSign, same pattern. Is it ready to go again? Rosetta Stone, this was because they put themselves up for sale. Evolent Health, I guess I compete against them because we do population health as well. Population health is a big thing right now. You had a Bible gap up and a kahuna occurring on Friday, closing near the high of the day. Now, as I look to the left, I realize that it's failed when it gets up high the last couple of times. Maybe not this time. I may take a small play in Evolent Health. Adobe, again, the software for Monday, sold off after setting a high. Zendesk, another big leader that sold off hard on Monday. So these might be things to put on your watch list. Salesforce.com, ditto, big software leader, sold off on Monday. My guess is if this market decides to go higher, these stocks will become leaders again. But you don't know that, I don't know that. And each one of these has a similar pattern of a intraday reversal on Monday and sell-off. This one looks interesting. It's already retaken the Monday high. It's an inexpensive stock comparatively, CALX. Good earnings per share growth, although small earnings. Is not profitable yet, so it doesn't have a PE. You look at Friday, you got a kahuna, pocket pivot, you're in a person buy. You've had a couple of kahunas, which are big signs for me. Looks very bullish on the weekly. I think Calyx should be on your buy list. Buy watch list, let me say it differently. All right, getting near the end of this side. And the last will be large pharma. AstraZeneca. I'll tell you about AstraZeneca. This was a sleepy pharma stock for a long time and not one that I paid any attention to. But boy, oh boy, is it in a bull run now. They've got a market-leading oncology portfolio, which they didn't used to have. They also will announce results on Monday of their partnership with Oxford in England on a vaccine, which may be best in class. What is the market cap on AstraZeneca? $160 billion. Now, again, Moderna was $30 billion, $32 billion. 160 trumps 32, but look at the current market sales and number of drugs on the market by AstraZeneca. I'd rather buy AstraZeneca than buy Moderna. We'll see. The time to have bought it was up here, Bible gap up, mobile breakout, pocket pivot, kahuna, and a new John person buy signal. So it showed up on a number of screens. It should be an interesting day on Monday for them. They are the leader in big pharma. Pfizer also has a vaccine, struggling to get above the 200. If you're looking for a stock at an appropriate buy point, you might look at Bristol Myers Squibb, mobile breakout from a squeeze, John person buy signal on Thursday, kahuna on Thursday, pocket pivot on Friday. And again, sideways movement, but very bullish divergence on the market catcher. So I like Bristol Myers Squibb here. AZ, I like more, but it's a little bit pricey compared to it. And I'm looking just as a distance from its base. And then lastly, a couple of old timers, Intel. Mobile breakout from a squeeze, sitting right at the 50, and a kahuna. What don't I like about this one? It's still got to get above the 50. You're probably safer to wait till it takes out the chandelier stop, but I would not be against looking at buying this as it breaks above the 50, if it breaks above the 50. Boy, another stock that I did a spread on that I wish I didn't. The problem with spreads is you get called away unless you roll it. The benefit of spreads is that it reduces your risk and cost to enter the trade. By a spread, I mean I bought a call out of the money. Bought a call at the money, sold a call out of the money. Did not think it would run all the way up to that call, and it did. Would I be buying it here? I could, but I think it's getting a little extended for me. I do own some NVIDIA. It too suffered on Monday, but not as much as the application software. What I don't like about this week is this. I don't like seeing banks on the downside list. These would be small banks. Failing at the 50 for U.S. Bancorp. Failing on regions. These are some of the bigger regional banks. PNC, failing at the 50. Synovus, failing at the 50. Trust, failing at the 50. That can't be good for the market if financials don't participate. Casinos, I made money to the upside and I made money to the downside. Right now I'm pretty much out of casinos. These were a great play on the reopening buzz, but are they a great play now? MGM, Las Vegas Sands, the index, Wynn. I'd like to see us be able to stay open as a country, but I'm sure as hell not going to Vegas. Now Macau is opening, so that helps some of them, like Melco, which is mostly a Macau company, but it too has not recovered. And then the big banks is another thing that one would like to see them participating. Their loan loss provisions, I think, spooked the market. Their investment income was great. So Citigroup failing at the 50. See if it can hold and bounce. JP Morgan initially rallied and came back. Wells Fargo, no. Then get down to Bank of America somewhere, no, because it wasn't up. It wasn't down enough. BAC. How more beautiful can you get? Fail at the 200, a doji at the 200, and then break down with a low close doji. It's hard to be long this stock right now. So for those like me that had long positions in Bank of America, and some of them were probably long positions that were held for a long time when you got them in the single digits, I buy puts when I'm worried about the market. And if people want to know why I waste my money on puts, because this puppy dropped from top to bottom 50%. And off the bottom, it rose 62%. Didn't make up for all the loss, did it? All right. Now, I like the top-down investing because I can go through the top 10 industry groups relatively fast. During the week, I typically take I have a market of what I call prospecting stocks. Let's see if it's in this group. This is what I like to prospect from. And I hit the warehouse view. And then you don't all have this because I include this with a John Person buy-in package. But I have a number of scans that I look. So I look at pullbacks and uptrends. Uptrend near free parking. So these are all the stocks that are in an uptrend, meaning they're above their 200, and that $2, 150,000 above their 200-day moving average, and they have to be within 2% of the 50-day moving average. And as you could see here, there were 57. And just to show you the typical pattern I'm looking for, it's in an uptrend. It's above its 200, and it's within 2% of the 50. Now I take that and I look at those that are in a squeeze. And I'm down to 50. And then what I might do is I might take this group and look for those that have mobile breakouts, so on and so forth. You can see why I like Intel. Nope. You can see why I like Bristol Myers Squibb. 50, mobile breakout. Here's another one I like, Massimo. Uptrend, pull back to the 50. Mobile breakout from a squeeze and a kahuna. This is on my list. Jackhammer on the weekly. I like this one a lot. Pluricite. Not really doing much of late, so I'm probably less interested in that one. It's in a squeeze. I don't see a momentum signal. Now I can also, and I built in, it's easy to do these things. How about mobile breakout from a squeeze? All right, how about mobile breakout and a kahuna from a squeeze? How about mobile breakout, kahuna from a squeeze, and a PPS buy? None of those. And these would be free parking in a squeeze. I also might look at uptrends near the 20-day. There were 169. How many of them are squeezing? 126. How many of them have a mobile breakout from a squeeze? Well, okay, just another way of looking. MasterCard sitting on the 20, on the 17 as this may be here. New person buy signal, mobile breakout from a squeeze. So I use my scans. Now, Jeff, I don't have those scans. I know you have to have John Person's buy signal, buy thing. I wanted to help encourage people to buy it, so that's why I built it for that. Everything there is easily crafted by yourself. It's nothing special, except for the John Person signal, which you wouldn't have if you didn't have the package. Now let me change this to a more typical view. And let's go here. Go up to the smart groups. I'm going to show you a couple things, and I'm going to say goodbye. Jeffrey Scott, pull back to the 50 with a kahuna. A lot of times these are buyouts, and they're not that interesting. These are done automatically for you. They're there every time you update the computer. Intel, we've already talked about. Massimo, we already talked about. ICE. It's gone sideways for too long, but it had two kahunas in a row. Arista Networks, Zix. So I'm able to find the same types of stocks with the built-in smart groups. Look at your smart groups. If you go up to Gallardi, his sprinters are an excellent list of stocks that are there for free. There's Novavax, Chegg, Regeneron, some of the recent big leaders. If you go up to Hgsi custom groups, go to the top 50. These are the groups that stocks that made it into most of the strong groups. Should be a lot of the same suspects, which it is. So these are great places to prospect from. If you don't have a lot of time, pick your favorite list and look at that. I like to conclude by looking at my buy list and commenting upon what I saw on my top-down review. So I did find a lot of interesting stocks. I didn't find a lot of stocks that I loved, but I found some interesting stocks, the majority we mentioned. First of all, on my bullish list with price and volume, I had 999 securities. That's very high. And that, again, is something I see when market is either topping or getting extended. The number of stocks that looked like they were bearish was 627. That's shockingly high considering how many bullish stocks I had. It just tells you the mixed market with the rotation we had. If I look at industry groups, what stands out to you? Biotech. Let's look at these very quickly. 10x Genomics, I liked this a few weeks ago. I still like it. It would have triggered a buy. You'd probably still be in the buy if you took it then. Mobile breakup from the squeeze, kahuna sitting right on the 17, and a new John Person buy signal. Arca Biopharma, they just got an investment, I believe, from Gilead. This, I don't like buying it over here. This is what I call the plug pattern. Major volume here, 83 million shares, and then it comes back to earth. I like to buy it when it breaks out from the base. Mobile breakout from a squeeze, pocket pivot, Kahuna, Arca Biopharma, ABIO. Looks interesting here. Goster, don't know anything about this, except I do see that it's gone sideways for quite some time. I'm in a squeeze. I've got a Kahuna. I had a Kahuna a couple days ago. It's got to clear this 200-day moving average and ultimately retest. I wouldn't give this a lot of freedom, but this looks interesting to me here. And notice the bullish divergence or convergence here on the person market catcher. Halozyme, this was the time to buy right here. We talked about it. It's probably setting up again. Inovio Pharma, we looked at it, one of the vaccine plays, and Moderna, another vaccine play. All right, so I got a bunch of biotechs. Got a bunch of healthcare services. Remember when we looked at on the Q tools, how healthcare services were high up on the list? I don't love this company. I hate its fundamentals, but I think Alpha Protec's going to run again, and it runs because it makes PPE. I got some REITs, but not your everyday REITs. I've got certain REITs that looked interesting to me. I have, if I care about yield, I might want to invest Granite Point Mortgage Trust. Why? Because it pays a 12.6% yield. All you can lose is $7 on it. I know that's obnoxious. That means you got 12% cushion if you hold it a year. Don't know anything about it. I just got intrigued by the amount of the amount of dividend. Just going down the list of other REITs, Invitation Homes. You know, I'm living here. I got a nice home here. I'm going to build a nice mountain house for the summers. And this one, real estate services for, and they own, renovate, lease, and operate single-family dwellings. I think in the future, more people are going to be renters than buyers. So this might be an interesting play. It pays a 2% dividend, had a Kahuna and a mobile breakout from the squeeze. Alexandria Research Real Estate, they sell or lease to biotech and other healthcare sciences, a very safe group, 2.5% dividend. American Cold Storage, temperature-controlled warehouses, that makes them less of a commodity. Multiple Kahunas, pocket pivots, person buy signal, mobile breakout from a squeeze, great earnings per share growth, 2.2% dividend. Duke Realty, all my Dookie friends. And then Equinox, when you look at it, Equinix, you might just pass because who's buying a $700 stock? Look at the earnings per share growth coming in now. And that might be before they pay out. Small dividend. This is a leader, and they are in the collocation, whatever they call it, where you have your servers for the cloud. That's an interesting play. Utility networks. When do I talk about utilities? Here's just a couple. Mobile breakout from a squeeze, a Kahuna breaking above the 200, 3.1% dividend. Evergy. EverSource, even better, breaking out already, 2.5% dividend. NiSource, further down in the pattern, 3.4% dividend. Truckers, these are not my typical growth groups, are they? Ignore this one. Well, not ignore it, never. I think we already looked at. But Werner Enterprises, trucks have been good over the last couple of days. High base breaking out here, mobile breakout from a squeeze and a Kahuna. No shortage of attractive looking stocks here. Now, again, just to reiterate for the 1,000th time, and I'll continue to reiterate, a presence of a stock on a buy watch list is not an indication to buy. All these stocks were up this week. Some of them were up a ridiculous amount. So many of them are already extended. In the next couple of weeks, I will add their high jump, low jump score, and I bet a lot of these are above 90%. Second thing is it's earnings season. You got to know when your earnings are. As I basically like to say, it is, this is interesting. This is their last earnings. You could see that a lot of them are coming out in July probably. I always say it's a decision whether or not to buy or hold over earnings. It's bad form to not know when those earnings dates are. If you look through, the vast majority of these stocks, as you might expect, had a new person buy signal or already are in a person buy. I don't think there's anything here. This is daily, weekly. There's a few that are in weekly sells, like the gold stocks and the REITs, but those I'd probably be less interested, although Intel's chart looked pretty good, you got to admit. But I just take this list, and I have a full-time job. I have 3,500 people that work in the company. Fortunately, very few report to me. But it's a big company. I can't trade all day. So what I do is I create my watch lists. I throw those stocks in the watch list into, they're all combined, and I got to reset this because I had too many in it. And I watch my radar screen during the day, and I look for opportunities. If I'm a thinker swimmer, I load up my buy watch in my market watch, and I have the same types of signals on the top. God, I wish I knew the math on Q so I could have headwinds and stretches and things. The problem, I've got a friend that could code them, but if Sager puts them in Thinkorswim, it's too easy for people to share them without paying for them, which is why I wouldn't highly suggest it. But boy, would I love it. And I look for things that give me signals. And my most favorite signal is this market thing right here. So I watch them and I take the things that are breaking out. On that note, it's been going on for hours. I took an hour and a half break in the middle to go to breakfast. I hope you have a great week. I'm only going to show my performance at the end of the quarter because some people thought I was stupid for sharing my numbers. Some people thought I was obnoxious, and my wife just told me it was wrong. But I think you need to know how your people you listen to do so you see it again at the end of September. On that note, I'm going to say goodbye. Have a great week, safe week, and happy anniversary to my beautiful wife.